right, so we're down more than 400 right now. Pretty bad day here. 7% losses there on the Dow. I'm joined by Bullseye Brief author and publisher and founder Adam Johnson, who makes his living picking these stocks and calling where they're heading. And you have been extremely optimistic since the night the president was elected, and you were right. So what are you thinking now? I mean, we've had quite a few days of losses now. Yeah, we have. But you know what? January this year, the one that we've just experienced, was the strongest start to the year, Trish, since 1989. I mean, you know, you think about how far you have to go back. I mean, that's, what, 38 years. So we're just giving a little bit back. That's what's happening. And we're giving it back because rates are going up. And you say, oh, rates are going up because inflation's going up. I know. But that's good. That's a good thing. It's because people are making more money. They're spending more money. That's generating corporate profits. It's a very, very robust story. You know, as we were talking about last week, and this is amazing to me, Trish, I've been saying that GDP is going to go to 4%. Right now it's at about 3%. And the Atlanta Fed came out and said 5.4%. And that's what kind of got everybody freaked out. Oh, wow, it's going to, we're much better off than we thought. Now the Fed's going to have to raise rates sooner than we thought. And that's going to extinguish all this excitement, and now we're going to sell off. No, it's just a period of adjustment. We're getting used to the fact, Trish, that rates are going up. The fact is, this economy is incredibly robust, and it's not just the U.S., it's actually globally. So there's a period of adjustment. We're all dealing with it. It's okay. You know, Adam, one thing that's really bothered me about the low interest rate environment is I just think, are we that, and I was saying this earlier, are we that pessimistic that somehow we think that 30 years from now, you don't deserve to get paid a whole lot more on whatever you're allowing the U.S. government to borrow? I mean, the idea that the 30-year has been as low as it has, the 10-year has been as low as it has, it is kind of crazy. It's like we don't think anything's going to change. So we've been living in like this Alice in Wonderland dream world. Okay, the Fed came in back in 2008 when nobody would buy anything, and they actually created a bid. We needed the Fed, but the thing is, they stuck around too long. They kept rates too low for too long, and now they're getting us back to normal. Well, that's because there was no one in Washington doing a darn thing. Well, we know what the shortfall was at Pennsylvania Avenue, and fortunately, we've amended that situation. But we're getting back to normal. The Fed should be raising rates. It's actually great for savers. Again, the story is one of growth. It's not one of trying to shut down the economy. It's about getting us back to normal, getting rates to where they belong. And getting people paid. You know, this is all happening on a day when the president's in Ohio. He's touring the Schaefer factory there, talking to workers. They all, 129 of them, got a $1,000 bonus as a result of the tax reform plan. And so one of the biggest issues has been in the last decade, frankly, the last 3 decades, how do you increase wages? How do you change that equation when and how is it that you can have unemployment that has been at such a record low and not see some kind of increase in wages? We've been waiting for it, and now all of a sudden 2.9% wage growth, Adam Johnson, in the last month. That is a great American story, the fact that people are now getting paid what they deserve to be paid. And, you know, I would also argue, quite frankly, that these low rates that we've had for several years, while, yes, it made it cheaper to buy a house, arguably it made capital decisions kind of inefficient. If you're a company, it's easy money. There's no urgency to go out and do something. Or if it's a marginal project, you're probably going to do it anyway because the cost of capital is so cheap. And if the cost of capital is cheap, you're not necessarily looking at your business rationally. You might not be paying people what they deserve to be paid. Well, we're getting back to normal where you start to prioritize people, projects. This is all very positive, Trish. Yeah, no, it's healthy. But what is it going to mean for the investors in the near term? I mean, I think what Heather was saying earlier is pretty insightful in that, yes, we had been running up. You made the point that we've never seen such a massive increase at the start of the year, not since the late 1980s. So does that mean then, you know, I don't know, 25,000, 23,000? No. Or is it once earnings kick in as a result of tax reform, we start to go back higher? Earnings have already kicked in. If you look at where the fourth quarter reporting season is tracking, and that's the earnings that we're getting right now, it's up about 11 to 12%. That's incredibly powerful. You add to that the $200 billion in tax reform stimulus, $100 billion in fiscal stimulus, because actually, yes, Washington will pass a budget. And then you might even get this infrastructure plan, which, by the way, at a $1.5 trillion is twice what I thought.
That's what the
Yes.
president said. You add all that together, you're going to get earnings growth this year of about 20%. That's a very powerful argument in favor of stocks, Trish. So we're just adjusting. Can I tell you one other thing?
Yeah, please do.
I know, like you wind me up, and I'll just keep going. All right. There have been a total of 8 corrections of at least 5% over the past 5 years. And the average correction was about 7.8%. On the lows today, we were down about 6%. So I think we're actually getting pretty close.
Okay.
This is a normal, just part of markets and adjusting to changes in the economy.
Very, very quickly, because we're getting the wrap signal because we got to pay some bills. But anything you're buying right now?
Oh, yeah, there are a ton of things to buy. I like GE way down here. I like Ford way down here. I've already said that the CBS board is meeting to buy Viacom. I like Hain. I think they get taken out. I think Viacom's going to get by CBS. I like biotechs. They're up today. I like Apple. It's up today. I'm not buying Amazon, but that's up today. People are finding selective value.
And they can find it on your website.
Yes, Bullseye Brief.
Thank you so much, Adam Johnson, as we continue to keep an eye on these markets.